Welcome back, Crypto Crew. This is not going to be a normal crypto update because it is 2026 and the market isn't being going. Actually, 2026, the market's not going to be driven by hype, headlines, or hopium. It's going to be driven by liquidity, internal plumbing, regulatory shifts, and who is being quietly forced to absorb trillions in debt. And this isn't your crypto Twitter nonsense we're talking about macro structure and positioning. And I am so excited to be back. Did you miss me? All right, Crypto Crew, let's get right into it. All right, it's your boy Tom here bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And of course, make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we're cryptomaniacs. And don't forget one thing, you come here because what? The information we give you is like an adrenaline shot with steroids and a triple shot cappuccino. Let's get into it. Before we even start talking about Ethereum, and listen, I got a huge update for you in altcoins as well. So before we talk about Ethereum and before we talk about alts, and I'm telling you, you're going to want to stick around to the end. Man, we got some really good stuff happening. We're going to start with Bitcoin and liquidity because that is the base layer of everything. Now, I also told you that liquidity is not the only driver behind Bitcoin and crypto. It's what? It's technology. If this whole system ecosystem that we developed for the last 15 years did not offer any type of utility for people, if it didn't make people's lives easier, it would have been trashed a long time ago. So liquidity is very important, but utility is another important piece of the puzzle. So really, the markets always focus in on liquidity. So right now, what I'm going to be showing you is something that not many people are talking about. And U.S. regulators are quietly rolling out a new liquidity tool. And it's not going to be through, QE. A lot of people think that the new Fed governor coming in is just going to be like announcing rate cuts, rate cuts, rate cuts. I don't believe that to be the case. I don't believe that to be the case. What I believe is going to happen is there may be a rate cut. I'm not really even too interested in it, but I'm going to show you a site that you can go to and follow it. But what is really happening is they're introducing a new liquidity pool, and it's not really through quantitative easing headlines. It's not through rate cuts either. It's through U.S. bank regulation. Oh, what are you talking about, Tom? What are you coming up with now? What are you coming up with now? Well, let me tell you something. On my one day off that I had, I actually started doing some digging to see where the next level of liquidity pool was actually going to come from. Okay, and it's something called Enhanced Supplementary Leverage Ratio, or the ESLR. And it matters more than people realize. Now, I'm going to take you over to the site, the Fed site. We're going to talk about it. We're going to discuss it in length. So get your number 2 pencil out because you're going to want to really record a couple of these 3 things I'm going to be going over. Now, here's the plain English for you. This is federalreserve.gov, okay? Agencies issue final rule to modify certain regulatory capital standards. This is the ESLR shift. And here's the plain English version of it. The U.S. government has a massive and growing pile of debt, and somebody needs to buy it. Now, for years, they've been using the Chinese, they've been using the Japanese, they've been using other governments to come in and to buy our debt. Now, things have gotten on the world stage, have gotten a little wobbly, you could say. So really, we really can't rely on the Chinese to buy our debt, or the Japanese, or the Australians, or the English. Things have, have gotten, like I said, wobbly and shaky. So now what the U.S. government's doing is the Federal Reserve actually helped to buy by buying treasuries directly. All right. Basically, it's like that's cannibalization, right? But anyway, now regulators are leaning on commercial banks to do the heavy lifting. So this is what's changing with the ESLR. Now, again, what is it? Okay, just again, get your number 2 pencil out. It's known as the enhanced supplementary leverage ratio. Now, starting January this month, with rules fully kicking in on April 1st, April Fool's Day, regulators are changing how banks measure leverage. Right now, it stands that banks must hold the same amount of capital against what they consider a super safe treasury bill as they do against much riskier loans. Now, that has always been what has created a balance sheet expensive treasury bond. So it makes treasuries balance sheet expensive when you do that. It discourages banks from holding them. Now, regulators have admitted this, and it doesn't really make sense, right? I mean, why should you have to hold that much against what's known as a super safe treasury, right? So starting this year, large and mid-sized banks see leverage ratios are going to fall from 5% to around, on a low end, 3.5, to on the upper scale of 4.25%. So bank subsidiaries are going to see similar cuts from 6% down to about the same range. That's a huge cut. That is a huge cut. Now, why this matters for Bitcoin and all crypto and altcoins and everything else, we need liquidity, right? But we also need a business environment that's good. We're going to be talking about the ISM again. But right now, what this changes, it frees up balance sheet space. It makes treasuries less punitive. The Fed needs this. They can't keep cannibalizing their debt. The debt. They can't expect China to come in and rescue us. Absolutely not. Not what's going on the world stage right now, where we're talking about what's going on in our southern hemisphere with Venezuela and what they're doing as far as Taiwan is concerned. Now, that's on the radar too, but we can't discuss that right now. But you got to keep your eyes on what's happening over in the Pacific. And, what's happening here in Venezuela, U.S. with Venezuela, isn't so much... Venezuela is absolutely. I mean, there's no match for the United States. It's not the Venezuelans. It's the Russians and the Chinese that are involved with Venezuela. That's the issue, right? That's the scary part behind it, because they've been involved with Venezuela for years, and nobody's done anything. Now Trump all of a sudden is putting a boot on Maduro's neck. Chinese don't really like that too much. Neither do the Russians. But we'll see how it all works out, because hey, got to be eternally optimistic. But anyway, all right, so I digress. So now banks will have more room to buy and trade more treasuries. They can offer more loans, provide daily financing to hedge funds, keep markets functioning smoothly. Some estimates suggest that there's going to be room for $1 trillion more of safe treasury activity. So we'll be looking at this expanding even further. Okay, with that, around 300 billion more for regular lending. All right, now that's quiet liquidity. It's not a bazooka, but it's real. So you talk about with the Fed expanding its balance sheet, quantitative tightening over, and now we're introducing these new levers into the marketplace. You can start to see where the drip is going to come from. So again, historically more liquidity. What happens? Stocks rally first, Bitcoin next, altcoins later. Now, what's even greater about this is where Trump's men come into play. He says that he's putting in somebody that is going to be like a lackey to Donald Trump in the Federal Reserve. I don't think that's going to be the case, because you can't have the Fed really lose face. I mean, so many government institutions have lost face already. But anyway, I'm going to take over to an article that was done by Reuters. And this is where it gets sugary, spicy, everything that's nicey, okay? Fed Governor Stephen Marin, a Trump-aligned voice, has floated removing treasuries entirely from leverage calculations. Yes, remove treasuries entirely. I mean, they are the U.S. government, right? So why do you have to have any money towards money right? Makes sense, right? That would mean banks hold zero capital against any treasuries that they buy. massive incentive to accumulate government debt. It's a regulatory form of yield curve control. I'll say it again. We've been talking about the yield curve, the 10-2. Last video I did, I talked about the 10-2. I introduced you to the 10-2 yield curve way back when we first started talking together, right? So this is another mechanism that they can deploy in order to actually control the yield curve. This keeps the 10-year bond yields low, keeps them quiet, drops the short-term rates low. So you have a beautiful, properly steep yield curve, but not too steep. Just beautiful yield curve. Oh, really sexy yield curve. But anyway, this would be the real liquidity bazooka. We're not there yet, but policymakers are trying to grease the system so it happens. This is what Bitcoin could be possibly sniffing out before the headlines do. This is what I was talking about in the open, or I should have said in the open that Bitcoin's like I was going to say Bitcoin's like a bloodhound right now, sniffing around headlines. I think I said that at my first, and I said, I don't like this too much. I was actually yelling too loud in the beginning, and I don't like to yell at anything. But anyway, so what we're looking at right now, if we wrap it up, when we look at the Fed article itself, and we look at what's going on with Reuters right there, what we can see, we wrap this up, is according to Reuters, U.S. Regulators have approved changes, right, to the ESLR. It's important because it directly affects how Treasury debt banks, how much Treasury debt banks are willing to and able to hold. Now, the Federal Reserve confirmed this, starting that in this year it's going to happen. Now, mid-sized banks will face lower leverage constraints, especially when holding treasuries. Makes complete sense. So in plain English, banks are being given more balance sheet room to absorb government debt and provide more liquidity. It's not QE, but it's a quiet liquidity lever. Okay? And like I said, that keeps the bond market quiet. And historically, when liquidity improves at the plumbing level, Bitcoin tends to notice before the headlines do. So I want to show you, on X, there's all a buzz about like these whales, right? Maybe they're actually starting to realize this as well. We have our X post here. The whales are back, right? Like I said, maybe the whales have snuck, they're smart guys and gals. Maybe they see the same thing that I see is happening. Now, whales are back. Our dress is holding 1,000 Bitcoin just flipped from net selling to heavy accumulation again. Now, I don't think, we discussed this. Bitcoin has been holding steady for 2 years as these long-term holders have been selling. All right, we discussed this in the last video. We're not going to readdress it. But retail watches price. All the big boys watch liquidity. And right now, they're stepping back into the game. All right, so let's get into the 2-hour chart. Let's break down Bitcoin where it is right now on the 2nd of January, 2026. And man, I got some really good stuff for you coming up. So just hang tight. Okay, you're going to enjoy it. I promise you're going to enjoy it. Bitcoin 2-hour chart, got a beautiful chart for you right here. Actually, I'm gonna extend this. I'm gonna give you a shift pitchfork. Hang on, let me extend that for you. Okay, that's better. So all I did was I measured this tine and I copied it and put it out. So now I have a shift pitchfork. And here's my support line right here. Okay, so as it stands right now, look at that. Bitcoin approaching the 91,200 level. We know that level is a very important level. We've been talking about it since 2025. Really, it needs to get up above this level and it needs to overtake 98,000 for the longer term. But right now, as it stands for today, because people say, Tom, I never know what to do with your analysis. You never come to any conclusions. Really? Well, I beg to differ if you listen. And this is the part that you got to listen to. Okay? Right now, there's support that sits at 87,400. Breakout occurs at 91,000. We're really right at the point where you need to watch Bitcoin right now to actually get up into the $93,000 area. Well, 91 first, right? But if it clears 91, we're looking potentially at Let's see something. We cleared 89. 94. We can get up to 94.6. All right, right now. Support sits at, again, 87,004. Resistance is right here. We're popping through it. Bitcoin could potentially go to 94,600 from here. So, what's the rule? Buy a dip with a tight stop. I mean, I couldn't, I would have told you earlier, if I would have got the video out earlier, I would have said that this pin down here, oh, that's pretty cool. I mean, really, sports sits at 87.4. The market dipped down to what, 88.4. So it's $1,000. But anyway, if you would have went down into a shorter time frame, you could have been able to basically scoop this. So right now, if we can break up through this area right here at 90,000, say 700, Bitcoin's got a chance to rally up to 94.6. How long is it going to take? I have no idea. It could happen in one flash. Could happen in another 2 days. I don't know. All right, so that is the short-term Bitcoin, what's happening right now with it. All right, so now it's really trading around 90,000 right now. So it's still range bound until we break out here. Still consolidating after the late 2025 correction from 126,000 odd, right? So the key drivers today, 2.2 billion Bitcoin Ethereum options expiry, which can exaggerate some moves. Tether reported adding significant Bitcoin to its holdings, a long-term accumulation signal. Bottom line, Bitcoin is actually positioning. There's no panic right now, and it's slowly grinding. So now I want you to take note. We brought this up once before where we talked about copper, and it's a very important metal aside from gold, of course. But if you watch this chart closely, and I'm going to take you over to the copper gold chart, we could look at this chart and we can see that copper to the gold ratio just rolled over again. Okay, historically, copper leads when growth optimism peaks, and gold catches the first defensive bid when that optimism fades. Now, in 2016, okay, it happened. In 2020, it happened, and right now in 2021, every major rollover, okay, ratio lined up with early stages of Bitcoin explosive cycles beginning. Remember, gold moves first. Bitcoin then takes over, takes the baton and starts running. If history rhymes, the handoff is beginning right now. Now, what this ratio is really telling us is where liquidity wants to go next. Out of growth sensitive assets into safety first, then back into and out onto the risk curve. Historically, that sequencing has been gold first, Bitcoin second. Now, this is not a timing tool. It's a macro context signal that tends to show up before Bitcoin jumps. And, you know, it does not give you the exact day of the start, but we have the price levels. So that's why I'm saying you got to get into our pro group. All right. I mean, we're trading. I'm going to show you something with the pro group right now. I was going to do it later, but I got to show you because I know a lot of you guys, man, and gals. This is too long. Let me get over to the pro. Let me show you what we got going on in the pro group. I want to show you this. Look at this dashboard. Okay. Everybody has access to this in the pro group. It's basically, you know, what we're showing, what our trades are. We have total 35 trades, win rate 65.71, 23 winners versus 12 losers. Equity jump 36% in 1 month. What are you waiting for? Now, of course, you know, past performance is not indicative of future results, blah, 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 blah. But we're traders, right? We show everything. We are completely transparent. And I'm going to show you something else later on. But look how cool this is. I mean, we're not afraid to show our trades, warts and all. That is for sure. So I just wanted to show you that because really what we're talking about 2026 is going to be hot. It's going to be hot. And it's right now, it's just getting hotter. All right, so let's go over Bitcoin. If we look at Bitcoin itself, we want to look at Bitcoin building an Adam and Eve. The Adam and Eve base. Just don't listen to the serpent, Adam and Eve, or to be taken out of paradise. Can't listen to the serpents out there saying we're in a bear market. They are serpents. Don't listen to them. All right, sharp V bottom, rounded retest. Neckline sits at 92 to 93,000. And look at this. Lo and behold, hold 87,000, break the red box, and this boring range turns into a trend move pretty quickly. So, structure greater than sentiment. Now, if we come on over and we look at Bitcoin monthly, we got a structure that's screaming retest, not reversal. We've been saying it all along. Now, we could be wrong, but we've been saying it all along. Good old Tom's been saying it all along. Matter of fact, some of my hydration hater station people, I haven't seen them around in a little while. Where are you, Fred Smith? Where the heck are you? Generally telling me, this guy's an idiot. This guy don't know what he's talking about. Blah, blah, blah. All right, let's see, So we got Rayleigh price sitting on that neckline that rejected a 2021 top, rejected a 2024 spike, is now being defended as support. If we lose this, we'll be talking damage control right now, okay? If we hold it, it may become the launch pad for the next expansive leg. So join the pro group. Like I said, I'll show you how to do that in a little bit. I just showed you the new platform that we got going on there. You're not going to want to miss it. Let's jump on over to Ethereum, okay? Let's talk about the ugly duckling that's going to turn into that hot chick. Hang on one second. Let me get off that chart. Wow, I found an old Ethereum chart. Look at this. We're finally starting to break out of the range. There's that 3,000, folks. And there's good old Tom saying if we do that and we hold this level, this is the same. The technicals are the same. We hold this 3, we're headed towards 3,300. The next stop, break of 3,300. Of course, there will be consolidation. Okay, Tom, you never tell me what to do, what I should do here. Well, I've been telling you, if we get a break of 3,000, we're probably going to be rallying up to 3,300. I've said that. Okay, so where's the support right now? Oh, man, support sits, it's always been sitting right around this 2009-30. Okay, deeper support, okay, ultimate support, 2006, right, because you have different layers, 2,700. But right now, Ethereum is clearing this, is actually moving up nicely. Bitcoin breaking up above 90,006. As good old Tom told you, that's the level it needs to go to get above 91 to head us to what? 94, we said, right? So right now, Ethereum is starting to show some signs of life. It would be great if we can get above 3,300. 3,300, okay, you could potentially get a dip back down to the 3,000 level, retrace back down. That needs to hold, and then we're shooting up towards 3,600. So that's the map. That's the plan. Did I tell you what to do? Well, you got to, I gave you the gas, I gave you the keys, I gave you the GPS coordinates. Now it's up to you, man, to execute the trades, right? Now, if you don't, look, this is a real quick hit. Get into our pro group. We'll show you how to do it. All right, so Ethereum is doing exactly what I want it to do right now. Ethereum is holding above 3,000, is tracking Bitcoin with slightly better intraday strength right now. Ethereum and Bitcoin hovering around 0.0338. No drama, no collapse, no breakout. But there's been a rotation. I'm going to show you that rotation in a second. So smart money contract demand is becoming steady. Liquidity, all right, is still on the thin side. Direction depends on Bitcoin and macro, and it's happening. I just went over some really good macro for Bitcoin. So Ethereum is coiled. It's not broken. I can show you the chart that we actually placed on December 30th. And this is the Ethereum Bitcoin rotation, and it's the biggest rotation we've seen in 8 years. The last time this setup appeared, Ethereum exploded 50x. It's happening again with deeper liquidity, institutional firepower. It's going to catch most people off guard. Now, I'm going to talk about Bitcoin dominance in a second, but before I do that, I want to talk about something that we did in the pro group. All right, and if you think I'm full of duck feathers, you just go and join the pro group and ask questions. But I want to show you something. This market has been a quiet, dull, down really market, right? Altcoins have been bleeding excessively, blood in the streets. Yet, we've always said for good utility coins, There is money to be made. You can't, pick up crappy coins. We've been saying that all along. Now, I want to show you something that we brought to the attention of the pro group, all right, or our community, okay? And it's something called Canton Network. Now, we pulled this coin out for our crew. We said, when it was trading right around 8, we said, okay, look, if we can get a break above 9, this thing is going to rally up to about 17, 18. This is 9 cents. Now, this is an outstanding opportunity. I suggest that you do all your research about this utility coin. It's going to be huge. The DTCC is involved with this project. So it's not a joke. Okay, it's not a meme. It's not just garbage. Go do your own research. If you have any questions, get into the pro group, seek Frank out, and he will tell you all about this network. This is what we do for our members. Okay, we're looking to become the premier group for information. Now, I have been really late to the party on this, but I have complete transparency. I bought myself at 9. 8.89, like that. I even bought more at 14. So I'm thinking now this is just me, okay? I'm thinking it goes to 50 cents. How long is it going to take? I don't know. But really, I'm not looking to sell this thing. I'm looking, for me personally, if this thing drops down, back down to like 8 cents, oh my God, that's me. Look, this is just the way I'm looking at it. I'm thinking, once you do the research about this network, you're going to say, wow. And now the DTCC is behind this, so there's a lot of weight behind this. And remember, the next movement's going to be real world assets. So again, I want to show you that what we got going on as far as our trading is going on. What happened to I lost my profits precision. Hang on one second. We got a dashboard right here. You see it's live. Look, you can have a demo dashboard. This is also, Merlin's going to explain this for you, but this is our live account right there. Real money, no joke. Really, come on. You got to get involved in the group, man. You got to get involved in the group. All right, let's go over to Bitcoin dominance. Now, we've been discussing it forever. We expected Bitcoin dominance to actually come up a little bit. It's sitting right around 59.35. As long as dominance hold firm or grinds higher, capital stays conservative, is going to stay in Bitcoin, right? For altcoins to really move, Bitcoin must stabilize, liquidity's got to improve, and dominance must roll over after Bitcoin confidence returns. That's always been the order. That's always been it's always been the same. So, but if we look at the chart, Bitcoin dominance just flashed the same risk-on signal as 2017 and 2021. Each time, okay, dominance rolled over from these levels. Bitcoin cooled, alts went vertical. Now we're coming back into the zone again, but here it is. Okay, that's why I told you hang tight for altcoins. All right, quick confession. 2025 was basically me saying, like, every 3 minutes, all right, this is it. Altcoin season's about to start. Well, maybe not every 3 minutes, maybe like every 3 months, right? But and the market was like, sir, please sit your ass down because it's not happening. So yeah, if you've been keeping score at home, I was early repeatedly. This year, I'm not playing that game. I'm not playing that game anymore. I'm not going to have any hype. I'm not going to have no vibes, no gut. My gut says we're going to be laying on some really hard conditions. And I'm going to say that that boxes need to be checked. If not, there's no alt season, no matter how many green candles you see on Tic Tac Tac or on Instatrash. No, okay? Because I'll still be hypey. I can't help being hypey because I'm just the eternal optimist, right? But I'm really going to really tone it down a little bit until we get all the conditions that I'm going to lay out here checked. Do we got a deal? All right, deal. All right, so now let's talk alt season properly. Now, I want this again. It all has to do with Bitcoin dominance. We know Bitcoin dominance is basically still, high, but really we got to fall back on what? M2. We're going to sit right back on this chart. Okay, so look, as more money enters the global economy, we said this. Investors move out along the risk curve. They keep venturing for greater returns, always greater returns with some safety. Okay, big boys don't like, they hate volatility. Okay, but they don't just jump straight into micro caps. They move step by step. Government bonds first, stocks, then tech stocks, then tech itself, then Bitcoin, large cap alts, then maybe smaller caps. The final step is alt season. It doesn't happen early, it doesn't happen emotionally. It happens because of structure. Now, the one thing that we can say is that we got some structure in place, but we need some boxes to be checked. So with that said, here's one box number one. I'm going to take you over to the official, what I call the official rate cut calendar. I will put this link in the description because this is a great site. So this is basically to show you where the pivots could happen throughout the year. There are 8 scheduled rate cuts set for, or meetings set for 2026. And this is where the Fed can potentially cut rates or actually issue guidance, right? So it's where the markets will be watching for shifts in tone, data dependency, for the next move. And I'm gonna, like I said, I'll put this in the description. So, lower rates. What do they mean? They mean cheaper loans. They mean more borrowing. They mean more spending, right? More risk taking. So there are 8 FOMC meetings in 2026. Q1, January 27 to 28th. Don't expect much to be happening there. March 17th to 18th. Q2. April 28th, 29th, June 16th, 17th, Q3, um, not Q3, July 28th, 29th, September 15th to 16th, October on Q4, October 27th, December 8th and 9th. Now, rate cuts don't cause alt season. They remove the ceiling for alt season. Like I said, I will put this link in the description for you. So it's a really good website to go to get information from. Now, I want to take you over to what is very critical. I've been talking about it a long time. The ISM Purchasing Managers Index, which tracks, what is it? Oh, you got it right. Manufacturing expectations. Key rule, above 50, we get an expansion. What happened to my 50 line? There's the line right there. Above 50, expansion. Below, contraction and a struggle. We haven't had a sustained break above 50 in a very long time. That's why I really know alt season hit. Okay. If the ISM breaks and holds above 50 this year, it's a major signal. Now, here it is. You know, we tapped it a couple of times. We're not even really seeing it. We're seeing some upticks, but you know, again, that's in the background. So we just got to watch this chart very, very carefully. Now, what else do we got going? Well, we got to watch the U.S. dollar. So this is box number 2. Okay, I'm going to take you to that right now. Box number 2, the DXY. We got it marked out for you. This is the alt season area. Okay, so what we really would like to see is dollar dominance, or the dollar to actually start falling off. So when the dollar weakens, capital leaves cash, it moves into assets. And that creates people, they push further out on the risk curve. So a lower uh, dollar index is a higher appetite for altcoins. So a sustained breakdown of the DAX would be very constructive. We could say that, that would definitely happen. Now, another thing that we have to keep our eye on for alt season, because I'm really defining it this year. All right, I'm not just going out. I don't care what Frank tells me. I'm going to say, listen, we're creating these boxes to be checked, and we will check in on these things. But we need to look for the market structure bill. Now that has been advancing. It has been advancing. And we could see it right here. Cynthia Loomis, market structure bill is advancing towards a critical markup. It's potentially resolving years of regulatory uncertainty for digital assets and finally giving the industry a clear legal framework. Industry leaders and lawmakers are in a final push they're in final push talks with U.S. senators ahead of key votes. It's a pivotal moment that could define how crypto is legally regulated going forward. Right now, institutions can only touch a handful of crypto assets. The market structure bill aims to change that. If and when it passes, there'll be regulatory clarity. There'll be institutional capital that can participate, and good utility coins, Canton, and a few others. That's why I say get in the pro group. Not everything's going to pump. Only value does. So, make sure that you know what you're buying. All right. So, but right now, alts do, the alts that matter right now are the really important ones, right? XRP, you're looking at some really good ones. All right, so before we actually drop off for today, before you wrap up, let me show you how you can get into that pro group that I've been talking about. So before we wrap up, this is how you get into the pro group. You click this link. It's totally free to join. All right, we drop insane alpha and trading opportunities daily. Don't believe me? Look at our win-loss ratio. 65.71%, 23 winners versus 12 losers. Up 36%. Oh, I think it's 34.5. 34. As a trader, don't you always find yourself like you exaggerate wins? And like you kind of muffle losses. Like if I lose $3,000, if I lose 3,600, I'll go, I lost $3,000. But if I make 3,600, I make $4,000 today. Oh God, I'm such a liar to myself. All right, let me get back over. I'll show you where we are right now. So by clicking that link, you get into our group. Hey, you want to go it alone? I get it. We got 2 outstanding brokers for you. Don't forget, we got the competition going on. Started, all right? So you could still jump in, all right? We got WEX, low fees, fast execution. We got BTCC, low fees, fast execution. All right, pick your choice, man. But I do suggest that you get into the pro group because we help you and we teach you like trading techniques. So, it's up to you. But anyway, I show you the new platform. I showed you the win rate. Now, let's put it all together. 2026 playbook. We got quiet liquidity seeping into the market via the ESLR. We got potential rate cuts. I don't think it's going to happen like really, really soon. We also got this guy coming in saying, hey, you shouldn't have to put any reserves against U.S. Treasury. So we got conditions where the ISM is starting to expand. We're looking for a weaker dollar, right? Also, I didn't really show you this, but this is rotation that's happening anyway, altcoins versus Bitcoin. But it's too late for that. I'll get into it tomorrow. So really, institutions are picky. They buy size, liquidity, sizability. So really, if this starts to play out, you got to make sure that you come on over and follow us on X, where we talk about Bitcoin, crypto all day, every day. Why? Because we're cryptomaniacs. So what else you got to do? Well, you got to get into our trading competition, man. You got to do that. What else you got to do? You got to join our pro group. Just showed you some outstanding returns. Okay? We're hot, hot, hot. What else you got to do? You got to trade with your head and not over it. What else you got to do? As a short-term trader in 2026, you got to enjoy the party, but dance near the door. I'll see you tomorrow. I'm so happy to be back. Cheers.